the fintech community and businesses like mine and my competitors are going to play a major role in supporting small businesses on the other side, giving them the credit and access to cash that they need to rebuild and keep growing their businesses on the other side of COVID. So yeah, I have mad respect for all the small businesses toughing it out and getting through this period. And there will be brighter days ahead, but this has been definitely a really scary time for Main Street small businesses.
Hold up.
Welcome, Level Uppers. We're here for another episode of the Level Up Mortgages Blueprint, where we speak with entrepreneurs in the personal finance, tech, and real estate industries about their blueprint to success. And I'm your host, of course, Paul David Eskew, and I'm here with another inspirational guest, to say the least. And this is actually David Jens from Merchant Growth Capital. Dave, how are you, man?
I'm doing good, man. Thanks for having me.
I am stoked to reconnect with you. And of course, we're virtually breaking bread because, as people probably figured out, we're still in this COVID thing. And you wasted no time in crushing that muffin. Can we talk about what you just ate?
Yeah, it was my mother-in-law brought over these little chocolate muffins with some strawberry, and if you put some sugary in front of me like that, I don't have patience, so I just ate it real quick. So
you just get her done. You get a bit of that pickle, and that's like a classic, like, good muffin. Someone baked it for you. It sounds like they had pretty interesting flavors. Man, I wish I had a bit of that support. I don't get any of that. I've got to go to like Brecca or Cobb's, but that sounds like it's definitely from the source.
Yeah, man, definitely.
I love it. Well, I'm not as cool as you. I've just got some simple green tea.
Green tea here too, man.
That's you got it as well. Okay, cool. Yeah, just to kind of give me a little bit of a small caffeine boost, but I guess do it in a way where you kind of feel healthy versus coffee, right?
Yeah.
Perfect, man. Well, I'm really excited to jump in. I guess for people who don't know you, I mean, what I most like about what you're doing, and I think why you're super unique to have on the show here, is that you're kind of in a couple of the categories we like to cover, and that's around fintech, personal finance, right? And of course, lending, right? So let's talk about, obviously what you do within the company and a bit of the story, but let's talk that into the questions on everyone's mind around COVID-19 has affected a lot of businesses, a lot of your customers' businesses. So let's talk about how it has affected the alternative credit industry and how you play a role in that.
Yeah, cheers. So I started Merchant Growth 10 years ago. We provide credit to Canadian small businesses. Our mission is to provide the most convenient source of financing for Canadian small businesses. If you think about your typical restaurant owner or retail store owner, it's a small operation. There's not a lot of staff, and the owner wears a lot of different hats. They're the chief marketing officer, operations officer, finance officer. They're really doing all those jobs as the owner. And so, our mission, like I said, is to be the most convenient source of financing, because for a busy person like that wearing many different hats, if we can make it really easy, quick online application, come up with a financing structure that suits your needs, and with a couple clicks and within 24 hours you're funded for whatever your business need is. That creates a lot of value. And compare that to your traditional bank process of getting a business loan.
Right.
You're looking at the studies saying 35 hours of time assembling different paperwork going
really, huh?
Potentially.
Wow.
So, time is money, and the business owner is busy. So if we can give them that time back so they can go back to operating and worrying about the other things about their business, that they want to be worrying about. Nobody wants to be, really doing the numbers and going through bank applications. That's not why you get into business, right? So, we're trying to create that convenience and also, reach businesses that traditionally the banks haven't done a very good job of reaching. And your single location storefront mom and pop type business,
right,
like a restaurant or retail store, they tend to go into banks asking for credit, and they hear a lot of no's.
Right.
And so not only do they put in all that time trying to assemble their application, but they actually get a no at the end. So, it's it's a frustrating experience for them. And what ends up happening is a lot of small business owners end up financing their business with their personal credit cards, trying to get money from friends and family to do it. Because the banks just aren't there for them. So we created sort of really simple credit products that address that need. And so you were talking about COVID-19 is quite interesting because COVID-19 has affected small businesses tremendously. You see like the stock market has bounced back pretty much all the way back to, its peak pre-COVID. And that's because, big business and big tech, those sectors are generally doing well. You've got pockets like airlines and certain business models that are challenged, but overall big business and particularly big tech is like actually benefiting in some ways, right?
Case in point, Zoom.
Yeah, exactly. And, Amazon and so on. So, this is kind of the really sad thing I think about this pandemic is it really hits that storefront business super hard. And, the government programs to date have been, great at stemming that bleed for sure. We could dive into that rabbit hole. Like I have a lot to say about, how those programs have worked so far for small business and where I think the gaps are that they still haven't really addressed and so on. But, it's tough. And we are seeing a lot of people stressed out about their future as a small business owner, particularly obviously in things like restaurants and gyms and things that are really tough to operate at a lower capacity. So we've been, trying to support our clients as best we can. We've been telling them what programs are available through the government and trying to help them to get those programs. We've been really focused on the health of our existing customers. In terms of making new loans to small businesses, that's really slowed down for us in this COVID environment because these government programs have come out. And so businesses that are struggling with the crisis have gone to the government programs first, obviously, as they should. Because that money is either interest-free or in the form of grants in many cases. So, and that's fine. And, but obviously those government programs eventually have to come to an end. The government can't just be handing out money forever. So at some point, those are going to have to roll off. And I think the fintech community and businesses like mine and my competitors are going to play a major role in supporting small businesses on the other side, giving them the credit and access to cash that they need to rebuild and keep growing their businesses on the other side of COVID. So yeah, I have mad respect for all the small businesses toughing it out and getting through this period. And, there will be brighter days ahead, but this has been definitely a really scary time for Main Street small businesses.
Yeah, 100%. A few things came to mind there. I mean, one is, there's probably some small businesses who still need help. I mean, the government grants aren't going to solve everything for everyone. So, and I guess before we get into that and asking maybe what the use case is with some small business who's asked for money recently, can you just break down a little bit more of how you guys actually do financing, like a bit about how it works? So we've got a lot of small business owners on the show. I'm sure a lot of them need more credit. What's your general criteria that like a bank it's just not going to do? Because I know they're very by the book and lots of layers, but yeah, tell us a bit more about your business model.
Yeah. So the simplest way to put it is the banks are very collateral focused when it comes to their small business lending.
Right.
So
like what asset can I hold on to in case you don't pay me back?
Correct.
Your property, your income, whatever.
Correct. Like in many cases, if you're going in and asking for a small business loan, the next question the banker asks is, do you have personal property? Do you have a house with equity? Can we work with that? Right. So, they're pretty sort of rigid collateral based formulas that drive small business lending at the banks.
Right.
Whereas we don't even ask about collateral at all. It doesn't even form part of our application process. We look at the transaction data in the bank statement and a few other sources of data to kind of piece together, is your business viable? Is it being run in a healthy way? And based on that, what kind of payments can it afford? And we offer credit based on that data. So, it's the bank lends against collateral, whereas we finance businesses based on their cash flow and their viability. They have customers coming in regularly, paying, and that's creating cash flow. And can we lend against that cash flow? So,
Seems a little practical, if you ask me.
yeah, it makes sense. It makes sense. I think, and the banks look at credit applications in this way when it comes to larger businesses. You
Right.
get into the commercial bank, you get into mid-market, you get into bigger businesses, then you have, teams that spend more time analyzing your cash flow, and they can put together cash flow loans at that level.
Right.
But you're not going to do that for loans of $100,000 or, really they don't, they don't start to get creative with analysis and solutions around cash flow loans until you're over like $1 million credit requirement. So, obviously, your average mom and pop storefront type businesses do around $600,000 of annual revenue, so they're way below that commercial banking threshold. So yeah, the small business threshold, it's really kind of rigid collateral based models, and we're able to provide small loans to that category, and do it economically by leaning on technology, by leaning on automation, and algorithms to come up with the offer size, come up with the credit decision and the price. And so that's how we're able to do many small loans in a given period, and run a business like ours economically.
I love it. So obviously, yeah, you're emphasizing a lot of speed, access that banks may not touch. And there's the general way it works, you said, around cash flow. So like, I'm a small business, I've got X amount of transactions a day. You then see if I'm viable for, Y sized loan. And then as far as the way I pay you back, is that in a lump sum? Is that on a micro transaction level, or just maybe a bit of detail on that, if you don't mind?
Yeah. So, we have two kind of bread and butter products. One is we take a percentage of debit and credit card transactions. Yeah, so you got your coffee shop, they get an advance from us of $50,000 to do some upgrades or to open a second location. And then from that point forward, we'll take 8% of their debit and credit card transactions to get repaid, for example. And we'll do that until we get our capital back plus a fee. And that's how obviously we drive revenue. And typically our expected term at the point of originating that loan is 10 months. So we're pretty short-term providers of credit. We're not writing 5-year loans or anything like that. So it's sort of quick. Within it, we'll go between 6 months and 18 months is kind of the typical duration of our financings.
Interesting. So the use case here, and this leads into part 2 of the question, is people who go to you generally are doing like a renovation, or it's like a short-term fix. Obviously, it's not super long-term. And I guess, yeah, like what is that use case? And during COVID, have you still seen people have some interesting situations where they need more credit, or is it basically like the things they would usually need is covered by the government grant? Like, is there any opportunities that have come from COVID, I guess?
Yeah. Great question. I will also finish the last question because I forgot to do that. Was I mentioned the first product, which is where we take a percentage of card sales.
Right.
But we also can take a fixed daily or weekly payment.
Oh, interesting.
And that's a lot of what we do today. And that's important to mention because some businesses don't accept debit and credit cards. They are, B2B businesses and get paid different ways. So by having a fixed payment product, we can, finance pretty much any business. Like within the small business category, there's just, we have in our CRM system, we tag the industry categories. We have hundreds of them. So all sorts of different industries. There's very few industries we don't touch. Crap. Now I forgot what you're.
No worries. Yeah, and then just leading into that, I mean, the people that are taking you up on.
Oh yeah, use case. That's right.
During COVID, the use case. Yeah.
Apologies. Yeah. So like typically, very common uses of funds for our products is it tends to be expansionary in nature. They have some opportunity to grow
Right.
their business. So they're acquiring some inventory, they're expanding their business, another location,
Hmm.
renovating, investing in marketing, taking advantage of vendor discounts, whatever it may be. There's some kind of time-sensitive need. Occasionally, there's some seasonal cash flow requirements. It's just slow season, and having some extra buffer in the bank during that
Fair
time
enough.
would be, helpful. Or some bill comes up that was unforeseen, or so on and so forth. So we don't contractually limit how the small business can use the funds. So
Fair enough.
every use case under the sun exists, but we do survey what that is, and it's part of the underwriting process to understand what the use case is. And
Oh, yeah, of course.
it tends to be to try and grow the business. And in COVID, there's been some businesses that have held steady and actually grown, right? So
Right.
overall, small businesses have had a tough go, like I said earlier. But there have been pockets where they've been stronger, and by being stronger, they don't qualify for things like the emergency wage subsidy,
Right.
and so they might still need money for inventory or for other expansion reasons. So we have continued to fund throughout this entire period.
Mhm.
Obviously the amounts that we funded were a lot less once we got into COVID because of
Sure.
the uncertainty and the government programs coming in to help. But now that businesses are starting to reopen, we're starting to see those traditional uses of funds to sort of gear up again and market or retool or what have you as things reopen.
Mhm.
And it is starting to feel, with every week a little bit more normal.
Yeah, and that's great. No, it's especially in BC. I know we're both in BC as I need right now, and yeah, we're doing pretty good out here.
Yeah.
Knock on wood, we keep that going. Okay, well, thanks for clarifying that. That's super interesting, and I think there's definitely, there's a need for what you're doing. I know on the mortgage side, I mean, very similar thing, right? People go to the banks because it's the first thing they know, and sure, they may have the best rates, not all the time, and then like the restrictions are more than you thought, right? More than you thought, at least with a lot of banks. And yeah, with what the insurers did last week and starting to tighten up how you qualify, because not just the bank that scrutinizes you, it's the insurer, assuming you put in under 20%, right? So
Right.
alt financing is definitely been surging there for a while now, more than ever, I think. So yeah, I totally hear you how you have that solution kind of on the business side, which is super interesting. And a quick little anecdote before we get to the next question: with any business that can apply for, I guess, some of your microloans, if you want to call them that. I mean, like, can a mortgage broker team or a realtor team, can that qualify, or is that more so like a freelancer or individual where like it doesn't really qualify? Is there a line there?
Yeah, so it's not a super hard line. Like I mentioned earlier, we're looking at how consistent and sustainable the cash flow of the business is
Sure.
to be able to afford sort of the payments. And we've got some algorithms built to assess that. And so the issue comes into play where if it's sort of like a one-man show and more of a freelancer, and then the revenues might be lumpier.
Right.
You work on a project and you
Sure.
complete and you get paid, or you get a commission or whatever, and so your revenues aren't as consistent. And so our algorithm, the way it's designed, is not going to like that application as much.
Fair enough.
But if it was like a brokerage that had several brokers under it, and it was kind of consistent revenue coming in from the activities, then our algorithm could look at that and say, okay, there's consistent cash flows here, right? So that's kind of how our business thinks about it. So our financing is really traditionally well suited for kind of brick and mortar retail and restaurant, which tends to have daily revenues that are pretty consistent.
Mm-hmm.
We've also now really made a push into e-commerce.
Yes.
Obviously brick and mortar retail has been being kind of slowly displaced by e-commerce for a long time now. And
ask Mr. Shopify that, right? Most valuable Canadian company as of late, over RBC, funny enough. Over bank.
Crazy. Yeah. So obviously, well known to everyone that there's just been this massive e-commerce surge, and we were funding e-commerce merchants even before COVID, but wanted to make kind of a bigger push towards that, create a user experience that's particularly tailored to that industry, integrate with some of the data sources that are more relevant there to kind of create a more tailored product. And so, yeah, we're very much now in the business of funding e-commerce merchants as well.
Okay, cool. So people who've got their side hustle going, their their Etsy store or their Amazon, FAB product or however they call that, FOB, right? What's the
I'm not even sure, to be honest with you. But
so it's basically drop shipping. So anyways, they play around with inventory. So those people are now within your market. That's really interesting. Well, that's really cool, man. So let's kind of transition a bit over into, I mean, yeah, we're really talking a ton about just like how do people get financing now? People always need financing, whether they're playing defense because shit, something's wrong, or they're playing offense, right? They're like, bam, this is the time for us to, level up and try something new and expand. Yeah, I guess like what are some other tech tools that you may recommend for some, or let's call it other personal finance options or tactics or even tech apps that you think should be in everyone's phone right now, especially as someone who's self-employed who wants to access more and more capital and or just manage their finances better. I mean, this is all about personal finance, really. So,
right.
what's your take on that?
Um, yeah. Um, like, to be honest with you, Paul, I'm not super knowledgeable on this side of things. Like,
Yeah.
all of our app is mobile friendly, but we don't have. It's not a native like iOS app. It's just
Right.
go to our site and
Yeah, fair enough.
your
Yeah.
application, and that's how all of my competitors operate as well.
Hmm.
So from a small business perspective, um, I don't know that there's definitely companies really trying to be your sort of end-to-end cash flow management and financing tool. There's some U.S. companies that do small business credit like we do, and they're trying to pivot into being more of that type of platform play.
Interesting.
Um, but I haven't seen anyone really nail it from an execution standpoint on that.
Fair enough.
The small businesses, in a lot of ways, think like consumers. You can market to them like consumers, but they do have different needs and more complex needs than individuals do.
Right.
So like apps like Mint and Wealth Simple and whatever else, there isn't really an equivalent for small business today. Our focus is on doing the financing piece extremely, extremely well.
Yeah.
Perhaps at one point we start to integrate with a provider of kind of more of an app, and be the financing arm for it. But yeah, I can't think of really a great app to recommend from a small business perspective.
Fair enough. Well, I mean, Wealth Simple and Mint are pretty good apps for the entrepreneur who's running the business to be
Totally
really good at, because if they're not doing well, the business isn't doing well, right? One would think, generally speaking, right? So no, I think those are actually some great tools you mentioned. And yeah, I think you cover an interesting part in that whole financing equation. You said not too long ago here that a lot of people get turned down by the banks, and then you have, of course, a more flexible solution. Are there certain like things you constantly see businesses overlooking that gets them in trouble with the banks, maybe even with yourself, just the way they run their business, like just maybe they're carelessly spending money on a certain category, they're just not managing their finances well. Like, what do you see as common issues that small businesses make their life hard to basically to make them a worthwhile borrower in the eyes of the bank and maybe even yourself?
Yeah. I think it's a pretty simple answer to that, and that is like your personal credit matters.
Right.
At the end
Wow.
of the day, and we as a fintech are primarily looking at things like bank transaction data. We're looking at social media data, other third-party data. We are also looking at that credit report, and the banks are definitely looking at the credit report, and pretty much everyone looks at that because there's valuable data there for a lender to consider. And just being sloppy with just being late on phone bills and stuff like that, and it's just hurting your credit is it's it might seem small, but it's meaningfully impacts your ability to get credit as a business owner as
Oh
well.
no, not just for mortgage finance. Obviously, when we look at a lot of that, but you're saying it's also for the business you're associated with. So they're assuming the business habits are going to be like your spending habits, which if yours aren't good, I
Yeah,
guess.
that's exactly the rationale. Like if
Okay.
you're, I don't know, if some investment bank is arranging some, giant loan package for a big corporate, like I doubt they're pulling the credit report of the CEO because it probably doesn't really matter at that level. You've got boards, corporate governance, you have a professional finance function. I mean, it's just a different ball game.
Yeah,
But
of course.
and the CEO doesn't even have the power to just kind of, or shouldn't anyway, if you have the
Huh.
controls, write checks to random things. So, at the bigger company level, it doesn't matter. But at the small business level, like the business's finances and the owner's individual finances are very intertwined. I mentioned earlier that the owner might be using their credit cards to finance the business, which ironically could be causing the credit issue I mentioned a moment ago, where the credit score is suffering for the individual, which will make it harder for them to get
Right.
individual or business credit from a
Cycle.
variety of sources. So, the business and the individual are linked, and they're linked in the eyes of anyone providing credit to small business. So definitely make sure that you're maintaining that in a good way.
Okay, super interesting. You'd think that would be looked at separately, but yeah, no, it makes perfect sense. And I'll link back to a how to repair / keep your credit score high article that I did,
Yeah,
and people can get refreshed on that. I know I definitely go back to it sometime because yeah, it's super key. It's your credibility basically.
yeah.
Well, that's useful. Thanks for that. Let's move more into a bit more about let's just say you as an entrepreneur, man, because man, like you've done some really amazing stuff, and you juggle a lot of balls. You just had, of course, you've got a 4-month old Margot, which is congratulations. That's amazing. You've
Thanks,
got
man.
a new. I guess you've got a lot of things on the go, plus your business, and you're not working crazy hours. We talked about that actually before we hit record here. Let's talk about a bit of like the habits you've built. Just to honestly just keep balance and not go crazy when you see your business get hurt by something like COVID. Like, I mean, you're pretty you're very humble about it, but let's dig into that. Like, what's your secret, man? Because that's all a lot of things to balance, and you're very cool headed, which I guess comes with experience. But do you have any like habits or even just I don't know advice for entrepreneurs that really are having a hard time finding that balance, especially with the stresses of COVID?
Yeah, I think it's a really good question, and we could talk about this topic for a long time. I started my business. It's almost been 11 years,
Wow.
and I've been through a bunch of ups and downs and stressful periods. And this COVID one ranks way up there for sure.
Fair enough.
Um, and it's that's part of the gig, right? So you don't sign up to be an entrepreneur running a business if you're not up for that volatility. Having to make tough decisions under pressure. Um, and I think that I'm not saying anything earth shattering here, but you got to figure out a way to stay kind of healthy and mentally healthy,
Sure.
right?
Sure.
So,
Yeah.
whether it's physical exercise, taking a time out and meditating, or
Mhm.
if you have issues with stress and anxiety, addressing those however you have to, even if it's talking to your doctor and working through it or whatever. But you got to be fresh, you got to be healthy and in a good state of mind to sort of be making those tough decisions. It's kind of like being an athlete, but it's you're using your brain, and so you got to be you know ready in a good headspace to do that stuff. So
Mhm.
um,
Mhm.
my myself, like I just try to take enough time out. Like I said to you earlier before you hit record, like I
Yeah.
know my threshold. Like I know at what point I'm sort of spinning my wheels and I'm going to overstress my system. And
Interesting.
so I just I cut her off at some point, and I'll take a time out or I'll take a day off. And it is really important
What's
to
that
do
trigger?
that.
I gotta say, because I mean, I struggle with that where I'm just in workhorse mode. I want to bulldoze through something, and at a certain point, you realize a little maybe too late. You're like, okay, that was a waste of an hour. Like it's like I guess you gotta pick your battles. So do you have I don't know a threshold or like a tripwire something where you're working on a problem. We're getting very micro here. And you then realize, you know what? I got to sleep on it. Or you know what? I got to go for a walk. Like, I'm sure it's intuitive, but let's dig into like, what's your tool? Like, because people are
Yeah, I mean, I think it's like this, lifelong journey of trying to increase your self-awareness that we're all on,
Mhm.
right? And like, I know people, in the finance industry that are just like beasts. Like they can just keep going, and I
Sure.
respect that, and that's great, and that works for them, and I envy it in a lot of ways. But I know that I can't do that. So, for me, it's just I start to just notice like my headspace sort of deteriorate, and I start to feel more anxious and more stressed out, and
You feel
I,
anxiety.
I just I just sense it, and I know, okay, I'm starting to redline, right? And
Mm.
and it's taken me a while to recognize that that's what it is, and it's those environmental factors that are like causing that situation, and then I address it, through um, mostly just trying to balance it out with taking some time out, but um,
So like go
you
for a
know,
walk, meditate for 5 minutes. Like what kind of stuff do you do?
yeah, 100%, man. Yeah, exercise is fantastic, obviously.
Right. Morning,
I
afternoon.
and for me, I grew up playing music. I played in bands and stuff, and
Okay, yeah, of course.
uh,
Yeah. Nice.
I've got my electric drum set here. I can't make too much noise with the baby and all that, but
Yeah. Right.
I'll bash away at that here and there, and that's like an awesome release and stuff like that. So,
Hmm.
I think it's yeah. There's no point in sugarcoating it. It can be tough, and
Mhm.
you're high performing CEOs running the biggest companies and politicians and so on. Like, though they might make it look easy, but I guarantee you they've got business coaches, therapists. They're half of them are taking some kind of meds to balance them out or whatever, right? It's like demanding, right? So
No,
you
fair
know
enough.
you
And
got to
so
figure out how to deal with it. So
I love it. And so on that note, let's talk about mentorship. Do you have a business coach? Do you have a personal finance coach? Have you had one? Do you recommend it? 'Cause that's a surging industry now, the knowledge industry. What's your take on that?
I think it's hugely valuable. I have a board of directors that I bounce ideas off of
Sure.
quite regularly.
Nice.
That in terms of currently how I'm currently set up, that's my current sort of like bounce ideas mentorship type of approach.
And let's
I
talk about maybe the small businesses who ask for loans from you. Like, you're like, man, they could just so use a coach right now. What do you recommend to like your customers, like, or people that, I mean, you're fairly experienced, man. You've got the luxury of a board. That's awesome.
Yeah,
What are
I mean,
like,
I think the amount of content that's out there right now, and that you don't even have to pay for, right? Just follow certain people on social media and stuff like that. Like, I think there is tons of knowledge out there, and so and there's a lot of ways to skin the cat, and we're all wired a bit differently in terms
right?
of our tolerances and approaches to building a business and so on. So, listen to a diversity of people. Listen
Who's
to
on your
some focus.
podcast now? Sorry to jump in. Who's on your podcast? Do you have who are you listening to these days? If you want to just get some examples out.
In terms of uh, I'm reading. I
What are you
just
reading?
started reading Bob Iger's book.
A Ride of a Lifetime.
Yeah, have you read it?
Yep, it's amazing. It's the I guess the outgoing Disney CEO who's been there about 15 years. Yes, it's magical, especially if you're a
Yeah,
creative. Great.
yeah, very cool. So I just started it, but I've heard good things about that book. So
Yeah, it's
I
awesome.
tend to like I haven't adopted too many podcasts. I mostly just read books, but
Beautiful.
I love reading business bios. There's always hidden lessons, and there are things that I
Mm.
can relate to in my own little micro way as well, and it makes me
War
feel
stories.
like
Yeah.
I have company a little bit at some of the challenges and stuff, um, and yeah, I mean, and it's interesting because sometimes you read one and it resonates, sometimes it doesn't. So it's because there's so many different approaches, and that's another thing too is you can sort of start to figure out what approaches resonate and which don't. And there's no right or wrong answer necessarily. Whatever kind of suits your personality.
That's awesome. Well, thanks for sharing that. I mean, that makes a ton of sense. Yeah, wrapping up with a couple of questions here on, I mean, yeah, let's stay on the theme of focus, right? How do you say no? Whether it's to a friend, family member, colleague, how do you say no without burning a bridge, ideally?
Um, interesting question. Um, Yeah, I mean, I think this maybe is an answer that is atypical, but I have found like a really great partner in my day-to-day business, which is my CFO.
Mm.
Uh, I've known him for a very, very long time, and he joined me about 3 years ago now.
Mm.
And we make for a very interesting team because
Mm.
I have more of the entrepreneurial optimist energy.
Right.
How do we grow the business? How do we do things? And then, so I'm more the yes man. An opportunity comes up, I want to say
Right.
yes. And then he's just my perfect bad cop because I go to him and he kind of like looks at it through a more,
Yeah.
cynical, like downside analysis kind of
Yeah.
perspective, and brings it back down to earth. And then that makes it a little bit easier to say no in a way, because it's like, look, I looked at it, I went through it with my CFO, but we can't dedicate resources to this right now or what have you.
Hmm.
I also took this master class. I love that site, by the way. I don't know if
Great.
you're in.
Yeah, I'm on it too. Bob Iger's got one as well.
Yeah, did you do that Chris Voss one on negotiation?
I haven't yet, but I have read his book. Remind me, it's called what's his book?
I haven't read the book. I know what you're talking about as well. I can't
Quite
remember the
good.
title,
Yeah,
but
it's the negotiation book for sure.
yeah. But anyway, that was neat. I like what he talked about. An astute negotiator will use like various governance structures around him as sort of the reason to say no, and that allows you to save face. So it's usually like, oh, I got to take that to my board, and my board maybe doesn't like
So
that or
nice.
whatever.
Yeah, yeah. Throw them under the bus. Yeah, it's never split the difference, and
That's right.
yeah, and 100%. Actually, I just got a business coach, and a lot of it now, I'm just like, yeah, sorry, I can't take this meeting. My coach wants me to focus on X, Y, Z. They only want me focused on whatever, and I think that's fine. It kind of shows that like I'm working on setting boundaries, and I've got people that I bounce ideas off of, and me saying yes to you to either meet or do whatever isn't so much about me. I'm taking into account other people, and as much as that's a good kind of mask, I think it matters, because if you say yes to something, you're now draining resources from someone else's time on your team who now has to help you with it. So I think what I'm getting there is you've got a committee of sounding boards that have different outlooks on things, and quite frankly, you've got to think about their time and their schedules before you say yes. It's not just about you, and let alone your family, right?
Yeah, absolutely. Yeah, I think that is a good way to like stay genuine, but be able to say no, and but not be perceived as just unreasonably negative or whatever. So
Good.
it's a good way to go.
I love it. Yeah, that's super cool. And look, end of the day, and not everyone's gonna be happy even if you frame it in that way. And I guess you have to be okay with that. Like, I'm usually a people pleaser. That's a recipe for disaster. And I think with anyone, if you can't face a little bit of conflict, then you can't make everyone happy. Even back to your product, you've got certain customers that you serve really well. Some people may not agree with it. You just have to, I guess, be bold in your own way, both in the way that you schedule your time and also your focus as a business. And it's all about focus, right? That's such a tough thing nowadays. And I think the more people get confidence around that, and they have like their morals around it, and they set boundaries, that's, I think, the sweet spot, but ever evolving. And yeah, I love your answer on kind of having a committee for that. Sometimes there's a blind spot, you can't see it, right? So I think that's super cool.
Yeah, man.
I
Yeah,
love it. Hey, just to wrap up, we covered a lot. I guess, yeah, like, what are some maybe some last words for business owners that have been hit hard with the crisis, but still want to expand. They still want to grow. Obviously, they should talk to you. But like, what are some, like, I guess, skill sets that you think will be key for people to build to get through things like pandemics and to get access to more capital and to expand? Because I'm talking basically, how do people go on offense right now when everyone else is doing defense?
Yeah, no, I think it's a really good question. And I think that the key is to, you basically, when faced with such an unprecedented event, and this level of uncertainty. Now it's starting to like look a little more certain. We know what kind of the new normal feels like a little bit more.
Yeah.
But if you remember, a couple months ago, everyone's just like, what the heck's going on, right? So, when you're dealing with a ton of uncertainty, you need to make a couple of very strategically placed bets on what to focus on, what the future might look like. And because it's such a new situation and the world's changing so quickly, you have to constantly revisit that assumption that that led you to make that bet, because maybe it's no longer true. So you have to be willing to accept that you were wrong and switch gears very quickly. Basically, you have to be very nimble and willing to do that. Some people, when they make a decision, they want to be right, and it takes them a little longer to realize they weren't.
Right.
And so, we did that a little bit in our own way in our business, and I'm sure others would have the same experience. We made certain very decisive moves right when this kind of crisis hit, based on certain assumptions. And in hindsight, we overdid it. We didn't need to do some of the stuff we did, but we did it to like make sure we survived in a good way. And I'd rather be too careful than not careful enough, right? So that's. Yeah, I mean, you just, instead of, if you're the type of person that's used to testing things and then using data to make your decisions, you're going to struggle in a situation like COVID, where no data is available and you're totally operating, in a vast unknown, right? So you just gotta like use common sense and be like, okay, if I'm a restaurant owner and this is happening, get the takeout going real quick, and retool the restaurant, and the experience and the marketing and everything around bringing people in when under the new restrictions. And it's how do I do that? What does that mean? And just like make a few investments and make a couple focused bets on that. That's sort of an example of a small restaurant, how they might think through that. But did you read a book called Thinking in Bets?
Thinking in Bets? No, I haven't.
You do? Yeah, that's a good one that I quite like. But this conversation made me think about it. Yeah, you just need to. In life and in business, we're constantly making decisions that have certain probabilities of different outcomes, and your decision making can be perfect, but your outcome could still be shit just because you don't get lucky. But you just gotta dust yourself off and make the next bet, make the next decision, and not get too caught up in like what she calls resulting. Like, that was a great decision because the outcome was great. Maybe it was actually a bad decision, but you got lucky with the outcome.
Oh,
you know what I mean? So I think it's you just got to sort of place a few strategically placed bets. You can't sit around and do nothing and just be like kind of deer in the headlights in the middle of crisis, because you're just going to get crushed, right? But you also can't like spin your wheels and do a bunch of stuff at once, because no organization can handle that. So you got to like do a couple of things that you think will hopefully work to get you through it, and you got to be revisiting those assumptions regularly, because maybe you were wrong, or maybe the situation's changing because it's changing so quickly, right? So
I love it. And regular meaning, like, do you do kind of, I mean, getting a bit more micro, is this like a weekly call you have with like a business partner, a monthly thing you do, a quarterly thing, or just kind of, you just sort of feel it out?
Yeah, I would say that it, I think it depends on the situation, right? Like when we were peak COVID stress, it was just hitting, lockdowns just hit, we're getting so many calls from clients, like that was crazy. And during that time I was on the phone with my like executive group like daily, right? And as things sort of become a little bit more clear what the new normal looks like, and we're just kind of humming along the strategy that we've established. And now it's like our cadence is probably more like weekly or even bi-weekly on a lot of it. So it depends on the pace of your change around you, basically.
Yeah, you've got to read the situation. No, that's awesome. Well, I'm glad you do that, and I think you articulate it really well. Big question too, right? So thanks for answering that. I guess to wrap up, man. I mean, I'm trying to think of all the things we covered in a short amount of time, and things that stuck with me. And perhaps you might have some last words as well. But I guess what I most got out of this, and perhaps what other business owners will also get out of this, is number one. I think what we just talked about is probably the most important. It's around a mindset to making decisions, making bets, making it in a calm, cool, and collected way. Like that's big, right? And I would assume that to be able to do that, you have to have a well-balanced life. You got to set boundaries. You got to say no in the right way. You got to have your mindful moments and unplug. Because if you're not at your best, you're not going to make good decisions. So I feel like in reverse order, we hit some really key things for people during these times. And then in a very, I guess, tactful way, we spoke a lot about alternative financing, and a lot of people still don't know it exists, or they confuse it with loan sharks, and they just shut themselves out from it, where really, although yes, these may not be permanent solutions, I mean, it can be a pretty expensive permanent solution, they're important band-aids that are going to get you through a certain period of where you're either struggling and you just need the money, you just bite the bullet, and or opportunistically, if you can make one of those calculated bets, we need to kind of invest into e-com, we got to do it now. It could be a good band-aid for going offense for a little bit, getting that cash quickly, and then knowing that once you get over that hump, you're going to be X, Y, Z way better off than if you wait 6 months to maybe get that cash the organic way. Because it's opportunity cost. We didn't talk about opportunity cost, but that's the one thing that people, I think, they just think about the cost. They don't think about the opportunity cost. If they don't do something, then they lose out on this potential upside. And that's when things get a little sophisticated. So I feel like it was cool how we talked about that. And I mean, look, even just the simple stuff such as, hey, like have a good credit score because you are your business and vice versa, especially as a small business standpoint. So don't screw it up for your small business because you are forgetting to pay your, your credit cards on time. There's automation behind that. And there's
totally.
like Mint,
Yeah,
right?
totally.
That help you look at your spending habits. So I thought we covered a lot of stuff, David. Is there any kind of like last words you want to put out there? Things that now that we've sort of really summarized it all, things that you want to leave people off as a way that they can kind of approach their business financing better in the future, and perhaps ways they can get in touch with you.
Yeah, man. So yeah, I think that um, you hit the nail on the head with the opportunity cost point, right? If you don't, you have an opportunity sitting in front of you, and you need the capital to do it. To not do that could be, very, very costly and could pale in comparison to the cost of financing. Another thing I would mention too is, we talked about the banks as an alternative to, well, really, we talked about fintechs as an alternative to banks, but we basically compared those two options. And one thing that I would add is, another way that businesses often get money is by selling a share in that business to somebody. So you can raise equity. So bring in a partner, sell part of your business, and sometimes that makes sense and is the right answer, but oftentimes that's going to be your most expensive source of financing ever. If you believe in what you're doing and you ultimately succeed, then by selling that share to that individual early on is going to be, by far the most expensive source of financing. So it's important to consider, where we fit relative to that, as well. And if you're, buying some inventory or renovating a patio or what have you, and there's kind of an immediate financial return from that, that, you're fairly confident in, then those are things that are perfect to finance with credit, right? So yeah, just thought I'd finish off maybe with that little point there. And once again, name of the company is Merchant Growth, merchantgrowth.com. Getting one of our team members to go over financing solutions with you is super simple. Click apply now and fill out a couple things. And we'll custom tailor something for you. So appreciate you having me on the show, Paul. And man, look forward to catching up in person soon.
Yes, no, hopefully. Well, they have folks. David Jens from Merchant Growth Capital, CEO and founder. Hey, man, this is great. We'll definitely have a part 2 soon. Be healthy, and thanks again. I think everyone definitely is going to be leveling up big time when they tune in some of the wisdom you bestowed upon them.
Cheers, buddy. Appreciate it, man.
Thanks so much.